Hello guys, I'm back here again with another one. So in this video, I want to share some snippet mentorship session with one of my students with regards to market structure basics for beginner. Okay, so you can do well to learn a lot in this video, backtest what you see and implement the ideas of market structures needed to succeed here. So let's go to the chat. We're just going to discuss quickly, the issue of market structure. I don't know if you've touched that, but let's just touch it for touching sake, right?
Okay.
So basically, we know we have how many types of market structure? We have three, right?
Mm-hmm.
We have the downtrend,
Mm-hmm.
right?
Yes. Hello?
Of lower highs,
Mm-hmm.
lower lows. This is what a downtrend consists of, right? Then we have an uptrend, right?
Mm-hmm. Yes.
An uptrend consists of a
Higher
higher,
high.
higher high, higher low, higher high, higher low. Then the last type of market structure we have is the consolidation,
Yeah.
which is ranging. We call it consolidation or ranging market.
Mm-hmm.
Most of the time in this consolidation, we don't really want to participate most of the time, because the market is going to use it for liquidity and all that. I don't know whether you know what liquidity is.
Yes. I'm still
Yes.
finding out.
So liquidity basically just a way for the market to trick people into making wrong decisions on the chart, or maybe buying or selling in the wrong place. So most of the time, this is what the market uses to do that, the consolidation. So that is why we don't really want to participate most of the time over here. So the best conditions you want to participate in trading are, the downtrend and the uptrend, and in the downtrend, what do we want to do? We want to sell in a downtrend,
Yeah.
and in an uptrend, we want to buy.
Mm.
That is the basic idea over here. But Ona, there's one thing you can agree with me. The issue with trading is we all know this market, the markets do not move smoothly like this.
Yeah.
Is that not?
You're right.
And this is what makes trading complicated. Assuming the market moves like a trend line like this, come on,
Yeah.
everybody will be a rich man.
Yeah.
So there's a lot more to it. This is just the basics, but just understanding the basic idea of when the market is buying and when the market is selling.
Mm.
That is just the basic idea, you want to understand from this. All right. So I think we go to the chart and just look for, basically, we can just see this is a quick example of a downtrend over here, right?
Yeah.
We can see the structure over here, lower, high, lower, low, right? The market is
Yeah.
selling at least for this point, and what do we say when the market owner is selling,
Mm.
before the market starts buying, market structure has to be breached, right? The market structure has to be broken, which is called the change of character, right?
Yeah.
Yeah. So looking at this, there's what we call the Dow's theory.
Yeah.
The Dow's theory, the Dow's theory states that the market will keep on trending down until there is a preceding structure break.
Mm.
That means the market will keep on selling until the recent high is broken, until structure is broken.
Mm-hmm.
So when this structure is broken, this is when we can start expecting, all right, maybe the market wants to start buying. But as far as structure is not broken, that market is going to keep on selling. And what confirms the market is going to keep on selling? What confirms the market is going to keep on selling is break of structure. Now look at this. Whenever the market is moving down, we have this, right?
Yeah.
This low. So what confirms the movement is going to continue is when the market breaks it,
Yes.
right? Then there's a pullback, it breaks it. Continuation, right? We can expect to be looking for trades over here,
Yeah.
which are the highs, just similar to what we have over here. You can see the market is selling. Let me just touch quickly. you know, structure is broken, confirms the sell is going to continue, right?
Right.
You can see the market dipped into the zone over here
Mm.
and sold for some time before going up,
Mm.
right? So
Right.
when there's that structure break, that is when you expect that, okay, maybe this market wants to start buying. Example, somewhere here,
Mm-hmm.
right?
Yeah.
The structure was violated over here. So you can expect maybe the market wants to start buying.
Okay.
You
Sorry.
know?
Can I ask a question?
Yeah, sure.
Okay. But most times the change of character should be, is the change of character is mostly valid in the higher time frame now.
Yes.
Okay.
Yes. This is a higher time frame now. This is H4 time frame. At least we can call it an intermediary term
True.
time frame. You
Mm-hmm.
know? Because most of the time, if you're using the charts, most of the time where we want to participate from, where we're going to be participating from, most of the time is going to be the daily time frame, H4 or H1. You know? So your change of characters, you're going to be looking for them around this zone. That is your change of characters that are going to determine whether the market is going to change gears from a selling to buying movement. So this is where you look for them. The change of character you're going to be looking for on the lower time frame is for confirmation entry.
Okay.
All right.
Yeah.
So that is just it. So the change of characters on the H4, H1, most of the time you're just using them. You know, let's say the market tapped into a weekly demand zone.
Mm-hmm.
Then you can maybe look for a change of character on the H4 or H1. You know, and most of the time I give my students a time, what we call a time frame alignment.
Mm.
I always say, you know, these time frames, they are not for fashion. They are interconnected with one another. You get? So each time frame, there's another time frame that you're going to use to get a confirmation for it. You know, one trouble a lot of people have is, you know, let's say the market tapped into a weekly demand zone.
Mm.
You know, tapped into a weekly demand zone. Then you now go and be looking for change of character on the M30 or M15. It's not done that way now.
No.
If you go too low, there's going to be a lot of false signals.
Mm.
You
Yeah.
know,
Look.
so for the time frame alignment, you know, you have monthly level, which is monthly order block.
Mm-hmm.
That is your monthly demand or supply zone. You look for a change of character where you get your change of character on the daily time frame.
Okay.
If the demand or supply zone is on the weekly, you get your change of character on what the H4 time frame.
Mm.
If the supply or demand zone is on the daily time frame, you get your change of character on the H1 time frame. This is how the time frame alignment is meant to be. You know, if you do anything other than this, you're going to have a lot of trouble. If let's say the market tapped into a weekly demand zone and you now go to the H1 to look for change of character, it might not really work out. You can see a change of character, you match it, and the market will just violate it. You know why? Because the time frame alignment is not there. You know, so this time frame alignment, these are just, you know, the best time frames that work with each higher time frame. You know, it has a certain structure that works best with it, and this is it: monthly into a daily structure, weekly into a H4 structure, daily into a H1 structure.
Mm.
You know, that is the basic idea. With more time, we're going to discuss into all this. You know, so let's check what we were discussing, right? So I was explaining the idea of the downtrending market, you know, and the break of structure. I said the Dow's theory. Let me write it. Maybe you want to jot, right?
Okay.
Dow's theory. Can you see it?
Yeah.
Right. So, as I said, the Dow's theory states that the market will keep on trending downwards until what? Until there is a preceding structure break.
Okay.
Now, when the structure is broken, that's when you can start expecting, all right, maybe the market wants to change gears and start what? And start buying, right? And similar to an uptrending market, vice versa.
Yeah.
The Dow's theory says that the market will keep on trending upwards until what? There is a preceding structure break. That is when you can expect, maybe the market wants to start selling.
Yeah.
Right? So this is just the basic idea. So we have two things we are looking for, when the market breaks structure like this, when it's in an uptrend, when this structure is broken, we call it what? Change of character or
Yeah.
break of market structure.
Okay.
All right, it depends. You can call it anyone that
Yeah.
you feel like, Then the uptrend, which is making the market, continue going up, we call it break of structure, BOS.
Yes.
Right?
Yes.
So that is just the basic idea. All this, I think, it shouldn't give you any issue, right? This
Yeah.
stuff, the basics,
Yeah.
So that's just the basic idea with what we have, So another thing I want to discuss in terms of this market structure, an element which is going to give you, an insight of where to select your zone is the idea of what we call premium and discounts.
Okay.
I don't know whether you've heard of this.
Yeah, but I don't really. I don't know it.
Okay.
Yeah.
So let me explain. The idea of premium and discount owner is, premium is when we want to sell. Discount is when we want to buy. All right. So the idea of premium is whenever the market is selling, you want to take trades only at a premium price range.
Yeah.
All right. So I'm going to explain that. Similar to buying, let me give a quick explanation. This is selling, right? And this is buying, right? So whenever you want to sell, this high that you want to sell from is a premium range. All right. This is also a premium range for you to sell. This is the discount for you to buy, right? And this zone also is a discount for you to buy. So I'm going to explain. Now, look at what we have on the chart over here. The market is selling this, right? So let's work with this. What happened over here? Now, when the market is selling, you have this entire range. What I mean by this entire range is if the market is selling something like this, the pullback that caused the movement down, right? And let's say the market is now retracing up. You have a range when the market is retracing up. I don't know whether you're getting my explanation.
Yeah.
Right? So let me explain again. When the market is coming down, you're having something like this, a downtrend, right? Then the market starts coming up. As the market is coming up, you have a range, which is from here to here.
Yes.
All right? So when you have this range, the next thing that comes to your mind is where are you going to sell? You want to sell at a premium price range. Don't get confused. Premium is just a high. Most of the time when we say premium, what just comes to your mind is a high.
Like sell at the
So
and buy low.
yes, you just want to sell somewhere here, or let's say above here. Now the reason is, there is a Fibonacci retracement is going to help you. Let's use it so that I understand better. Look at this. That range that I told you about, right? Look at what we have. The market started retracing from here, going up, right? So you now draw your Fibonacci retracement tool from the range. That is from this high to this low. You draw a Fibonacci retracement tool, right? So the idea for you drawing this Fibonacci retracement tool is you want to get a premium price range. And a premium price range owner is above 50%. Anything above 50% is premium.
Okay.
All right. So just look at this. This is 50%. Right? So you want to look for a selling move only above this 50%. That is when maybe you can look for an order block. And this is the only order block we have, right?
Yeah.
Then you can expect to say, maybe you want to sell from somewhere here. That is the basic idea. So now the idea of this selling high is, you said you did business, you're doing business, right? So
Yeah.
what is the psychology of someone who is doing business, who is selling something? The psychology of sellers want to always sell their product at a high price. Is that
Price.
not?
Yeah. Yeah.
You know? So similar to this, you know, you want to sell at a higher price because whenever the market is retracing,
Mm.
you know, the market wants to go and pull out more orders from where? From a premium range. If the
Okay.
market is selling, you want to go up and then start selling
Yeah.
so that they pair up the orders. I don't want to confuse you with too much English, you know, but the idea on the trading, you know, is just the market. Just think of it like a real-time market. Sellers want
Yeah.
to sell high.
Yeah.
So that is the basic idea with this over here, you know. So
Okay.
most of the time, this idea
Sorry,
now
sir. I
is
have a question. I'm so sorry about the
okay.
Fibonacci. I don't really know how to use the Fibonacci, and I noticed like is a very good tool to understand very well, especially in synthetic. So
All
is it
right.
when
Yeah, yeah, yeah.
okay, when the market is in a downtrend, for example, if I take out my Fibonacci, so I'm placing from the recent high to the recent low, then I'll check.
Okay.
I don't know how to use it. I mean, I'm asking how do I use like
Okay.
Fibonacci to properly.
Let me just finish this explanation. I'm going to do a top-down analysis, you know.
Oh,
So in the
okay.
top-down analysis, I'm going to show you how you're going to draw the Fibonacci retracement tool, you know, and the zone you're going to concentrate on.
Okay. All
All
right.
right. So that's just the basic idea. So, you know, on this Fibonacci retracement, as I said, you want to sell high. And you can just look at the numbers. You know, let's say let's just call this $0, you know, $23, $38.2, $50, you know, $61.8 and 100 USD. You know, the highest things on this Fibonacci retracement tool for maybe someone who wants to sell is the 61.8 and 100. You know,
Mm,
if let's say you were selling a product and they give you a price range, these are basically the two prices you want to sell the product if you have an opportunity, either $100 or 61.8,
yeah.
right? So that is
Yeah.
the basic idea with selling. So in the selling activity, you just want to sell at a premium. So when
Mm,
you want to sell at a premium, what you do is you ignore anything that is not in a premium range. All right. And look at
mhm.
this. Look at this other block over here now. That is why the market breached it.
Yes.
The market breached this zone because it's not in a premium range. And initially, the market idea is the market is going for a premium range before it starts selling.
Okay.
So you don't mark zones like this, which are not in a premium. Instead, you wait for the market to go into a premium before you start looking for selling opportunities. All right.
Yes.
So I'm going to explain the idea of a Fibonacci retracement tool. Don't get any trouble. So the the other idea, which is discount,
Mm,
you know, that is in a market move that is buying, right? The idea is you want to buy low. Now, let me just give you the general explanation. We all know the psychology of buyers in the market. You know, if today you want to buy an iPhone, let's say you want to buy iPhone 15 Pro
mm,
Max, you know, and let's say the phone is actually selling maybe for, you know, 1.6 million. If there was a possibility, if there was a possibility for a massive discount and that phone, let's say, is going to sell for 50,000, everybody's going to buy it.
mm,
Because normally buyers, anybody who wants to buy something, you want to buy it at a low price. You
yeah.
know, let me give you a second quick example with regards to just the country, you know, the issue of fuel.
Yeah.
Let's say tonight, you know, you're at home and you just see breaking news. The government decides that tomorrow they're going to sell fuel at 100 naira per liter. Trust me. Tomorrow, if you wake up in the morning and you want to go to the filling station to get fuel, you will not even get to the fuel pump. Everybody is going to come out to get fuel.
All right.
There's no how you're even going to get fuel because someone is going to wake up as early as possible for that fuel. You know, so that is the basic idea. Buyers want to buy low. at a low price, and similar to trading also. That is the idea of buy low. When the market is in an uptrend, you want to look for a range. When the market starts retracing, that is this range. Then where do you want to buy? You want to buy below 50%, which is a discount for you to start looking for opportunities. So anything that's going to make you buy here, you're just going to cause trouble for yourself because the market is going to breach the zone. So you wait for the market to tap into a discount range before you
Okay.
you
So
buy.
above there is a premium zone. Below 50 is the discount zone.
Yes, that is the basic idea. So above 50 in terms of selling activities is premium. Below 50 in terms of buying is discounts. All right. And there's a golden zone to buy from. I'm going to tell you all that, when I start the analysis stuff. So that is just the basic idea. I don't know. Do you understand the idea of the premium and discount?
Yes, I do now.
Can I carry on?
Yes, you can.
All right. So let's carry on now. Just want to do a quick top-down analysis. Now, this top-down analysis, I want to start incorporating what you're going to be looking for on the chart. All right. That is what I want to start incorporating into you now, so that you know exactly what are you looking for on the chart. Whenever you want to trade, what will you look for? So that is what we just want to see over here. So let's go to the monthly time frame. Our top-down analysis owner always starts from the. That is the basic idea with what I have for you in these videos, guys. So whosoever is interested in my mentorship service, you want to get something like this, you can check the pinned comment section in this video. You're going to see a link which is going to lead you to my WhatsApp, so you can make inquiries about the nature of my mentorship service. All right, so that's the basic idea for what I have for you in this session, guys. Have a good one.